We've got one of our favorite educators. Our good friends from Schaeffer's Investment Research have sent Todd Salamoni, the Senior Vice President of Research over there. Todd, I'm sure, has some great insights into this space and just what's happening in the markets specifically. So as we move him over and get his camera and mic on, you investors, ask your questions. Todd, welcome.
Thank you.
My pleasure, man. My pleasure. Where are you coming from today?
Cincinnati, Ohio.
Cincinnati, Ohio. There's a couple of songs about that place, I hear. All right, Todd, I'll let you dive right into it, man.
Okay, thank you. Okay, my name is Todd Salamoni. I am with Schaeffer's Investment Research. We've been providing education and particularly options education and option trading recommendations to retail traders for nearly 40 years. So we've been in business a long time. And over the course of those almost 40 years, we've been learning about the stock market too. But we do have as much, if not more, experience than anyone in the industry as far as the education and the timely trading advice. And me in particular, I've been with Schaeffer's for over 25 years. I'm a graduate of the Ohio State University, a degree in finance and insurance and risk management. And risk management is a huge part of what we are all about in terms of the options industry. Today, what I'm going to be discussing is opportunities in small cap stocks based on Russell 2000 analysis. And then what I will do at the end is I'll provide you all with 5 stocks that I like, or at least should be researched on your part. And one of those does include a biotech stock, as this is the topic of conversation. First, some 12-month stats. Just looking at the Russell 2000, which is an index of 2,000 stocks that are small cap oriented. Over the last 12 months, you have the Russell that's up 123%. The S&P 500, which is your larger cap stocks, top 500, is up 70%. And the NASDAQ 100 index, which is your big cap technology names, some of which are biotechs, is up 86%. Now you look at the year to date, the Russell 2000, and this is as of Monday morning. Russell 2000 up 14%, S&P 500 index up 5%, and the NASDAQ 100 up 1%. Now I've got some update. Of course, the Russell takes it on the chin yesterday. As of about a half hour ago, the Russell's up 12%, the S&P up 4.5% year to date, and the NASDAQ 100 is up about 0.5%. Now, back in December, before short interest was all the rage with GameStop and some of the other names that are highly shorted, I made this comment in Monday Morning Outlook. This is a commentary that I write that is posted on schaeffersresearch.com every Monday morning. And this is in mid-December. I said small caps may be the biggest area of opportunity as measured by the iShares Russell 2000 ETF, ticker symbol IWM. With the IWM and SPY, which is a S&P 500 ETF, experiencing about the same performance in 2020, there is much more short covering potential in the small cap area relative to large cap stocks. Now, for some of you that are not aware of short interest, this is when an investor bets against the stock. He borrows the shares from his broker, sells them, but at some point in the future, he has to cover that position and repay the number of shares he borrowed from the broker. So it represents future buying power, short interest. So here's something technically I was noticing too, back looking at the iShares Russell 2000 ETF, or IWM. If you look at the chart, you'll notice that dashed horizontal line, and that represents double the twin peaks of 2007. And if you remember 2007, that was the beginning of a bear market into the March 2009 low. And it was also a significant peak back in 2011. So that occurred around 86, 87. And if you double that level, and as a technical trader, when analysts are waiting for a breakout above that said resistance level, 86, 87, and buy, they are at they will maybe take profits once that investment doubles, which it did back in 2018. And as you can see by the dashed line, that's when the IWM peaked back in 2018. And it wasn't until I was making those comments back in December, I was using the short interest out there and also this technical breakout, if you will, above a previous resistance level, which made sense in terms of being double that a former resistance area, that the small cap space really began to get on my radar. And that's where we are today. And just to give you an example, what we do at Schaeffer's is every time short interest is updated, which is once every 2 weeks, we add up the total short interest on various components of indices, such as the Russell 2000, the S&P 500, and the NASDAQ 100. So this first chart here in the red adds up all the total short interest. And this chart goes, yes.
I'm so sorry to interrupt you, man, but if you're showing a chart, we cannot see it at the moment. So I just wanted to give you a quick heads up.
Okay, I'm sorry.
No worries. It should be a share screen button just at the bottom bar there.
Okay, I am looking for. Okay, share screen.
There you go. I knew the second you got into charts that we should be seeing something. No worries. Yep. No worries.
Screen. How does it look now? Share.
Here we go. There. Now we've got you.
Perfect. Thank you for prompting me on that.
No problem.
So that just to show you what you missed, I was previous to that chart. I was showing this this chart of that breakout level back in December. Does everything look okay now?
Yes, you're good. Sorry.
Thank you. Okay, so here's the chart I was just referring to. So that red line is the total. We added up all the short interest on all components of the Russell 2000, and that's the red line. As you can see, that has been building for at least the past 6 years, but began rolling over back in the middle of 2020, July, and that's right before, a few months before vaccine news came out. But whatever the case, there was a steady build, and now we're beginning to roll over. And when you combine the fact that you've got this index where its components are heavily shorted, but now the shorts are starting to run for cover, and that index experienced a technical breakout, to us, that spells opportunity. And just as a comparison, if you look at the S&P 500 stocks, and that red line again represents short interest, again, significant short interest, but look where that red line is compared to previous years. Not as much short interest relative to the past, and the same is true for NASDAQ 100 stocks. Not as much. There's been a lot of covering, and yes, that could continue, but relative to the past, not as much short interest. And remember, short interest equates to future buying power. These people that borrowed shares to sell from their broker at some point have got to come back in and cover those positions. That represents demand. If you're long or invested in a stock, you've got to like the fact that somebody has got to come back and buy that stock in order to cover a position. That all said, and of course yesterday happens and I was preparing this, another thing that we do is we look at option activity on components of each index. And as you can see in this chart, this is a 10-day buy to open put call volume ratio on IWM components. It is coming off a very low level. So short-term traders we're very optimistic. When you buy a put, you're betting on a stock to go down. When you buy a call, you're betting on a stock to go up. That ratio of puts to calls was very low. As a contrarian, that was a red flag. that, okay, in the short term, we may be vulnerable to a pullback. And of course, the Russell pulled back something like, I believe it was 3% yesterday. So that pullback wasn't unexpected. Now, that doesn't mean that I'm no longer bullish on small caps. I think in the short term, it meant this index is vulnerable. Stocks aren't going to go up every day, of course, and there are corrective modes. And I was looking at this chart last week when it came across. I'm like, oh, we are vulnerable. And we got some of that. And then the other thing I'm looking at, this is a long-term chart of the Russell versus the S&P, way back to 1988. And as you can see, right before this correction we had yesterday, it was bumping up against a relative strength trend line, if you will. So I saw an area of vulnerability there. Again, that's very short term. But I've circled instances when the Russell begins to outperform, going back to 88. And as you can see, these periods of outperformance tend to last years. So if you're looking for the history as a predictor of the future, one's got to be bullish on this upswing we've had in recent months in the Russell, in terms of this could last years. And yes, there will be short-term bumps in the road. And I think from a technical and a sentiment-based perspective, we had that was evident. Here is a chart of a daily chart of the IWM, and as you can see, I've got. This is a very interesting chart. The top pane shows you year-to-date daily percent returns. And I am fascinated how indices will respect round year-to-date percentage levels. So earlier this year in January, we had this peak at the 10% year-to-date level when in a pullback, and that 10% was at 215.60. Then we got through it, and then we recently peaked at 235.27, which is around 20% year to date. Now, where could this pullback end? I tend to look, I know a lot of people, technicians, look at the 50-day moving average. We at Schaeffer's, we look at the 80-day. We have found too many instances where people get shaken out at a break of the 50-day, which happened yesterday, and I don't have that on the chart because I did this. I showed this chart as a Monday, but that 50-day moving average broke yesterday. So, I think we could pull back to the 215 area, which would be that year-to-date 10% return and that 80-day moving average. Now, is part of just okay. That's where we are. That's just an analysis of the Russell. I know small caps have gotten a lot of attention. I mean, here we are talking about small caps on this in this conference this week, based on technical and sentiment-based analysis. I think these small caps are your biggest area of opportunity in the months, maybe in the next couple years. You can throw in some fundamental analysis that I'll leave that to someone else. Is the why we're rallying? But the fact that we had this long-term breakout, the fact that there is so much more short interest relative to the past, I do think it's an area of opportunity. So with that said, I thought I'd just give you guys a few ideas that I think to consider for your portfolio. And what I did is I had a quantitative analyst go back and say, okay, give me some stocks that are displaying strong price action. Strong price action is vague. So I had them just give me some stocks that are showing some strong year-over-year returns, decent year-to-date returns, are highly shorted, again, because that's my whole thesis that this short covering that's going on now has a while to go. And may be unpopular with Wall Street. Again, as a contrarian, believe it or not, we will find stocks that are doing well, but Wall Street analysts do not like. To some people, that may be a red flag. And sometimes analysts are right, but we look at it in terms of the price action saying one thing, but Wall Street analysts think another, and that might be upgrade potential. I'd love to be in stocks where I wake up in the morning and all of a sudden see that my stock just got upgraded. So, so not only do these stocks represent short covering potential, but there may be some upgrade potential because the market is saying one thing, but analysts think another. So the first one I'll start off with is a Spira Women's Health. So what they do is they are it's a small cap, less than $1 billion market cap, in fact, and they develop gynecology tests for identifying ovarian cancer and other gynecology diseases. They just expanded network access in October. They just got a deal with the state of New York Medicaid that it basically approves their test. So now you've got more patients eligible for these ovarian cancer tests. In January, they broke out from a technical basis above their 2011 intraday peak, but the shares are well off their all-time highs in 2003. Short interest is 18% afloat, which is huge. Short interest just came out. I've got 9.5%, so there is some covering going on. Shorts are in covering mode, and that could be supportive in the months ahead. So that's one to look further into. Maybe somebody at this conference will ask about that or talk about this stock or company, or it's something you all could ask for if you evaluate this for your portfolio to get more of a fundamental. So that's one. Now, I know this is a biotech conference, but some other small cap stocks that hit my radar. And, it's interesting because some of these may be new, but some are names we're very familiar with. Alcoa and US Steel. Both them stocks, only like a $5.8, $5.7 billion market cap. Again, when you think of Apple, $2 trillion, Alcoa and US Steel, very small. And look at the year-to-date returns. Alcoa, 25% up year-to-date, over 400% year-over-year. US Steel, 28% year-to-date, almost 300% year-over-year. So again, we got the small cap stock, the price action outperforming year-over-year, outperforming year-to-date. You look at the short interest on these stocks, Alcoa, 5.5%, US Steel, almost 12%. And then look at the analyst ratings. Alcoa, 7 buy ratings, 6 holds, upgrade potential. US Steel, 2 buy ratings, 6 hold ratings, 4 sell ratings. There is nothing worse for an analyst to have a sell or a hold rating on a stock that's outperforming. So upgrade potential, short covering potential, small cap names, and names that you're very familiar with. Now let's move on to some newer names. And again, if you're looking at small caps, it's good to diversify. The small cap index, actually, if you look at the biggest sectors, healthcare is one. Consumer cyclicals, industrials, and financial services, and then technology. So technology, I think everybody's in, but there are some opportunities in these industrial cyclical names. So that takes us to Shake Shack. What I like about this, operates roadside burger stands, $5 billion market cap, only about 300 shacks worldwide. So tremendous growth potential as this world recovers from a pandemic. Stock hitting highs as early as last week. Huge upgrade potential, 4 buy ratings, 15 hold, and 2 sell ratings. Just amazes me. And this is a stock that's up 40% year to date and 230% year over year. Then that takes us to Sonos. If you want to get into technology, they make audio equipment that you can multi-room audio systems. Mid-November announced a buyback plan. Shares gapped higher in mid-February on earnings, so some earnings momentum. Surging year to date, year over year. But look at the short interest afloat, short covering potential, and again, more hold ratings than buy ratings. So those are some stocks that I like. If you're interested in that small cap world, you got a technology name, you got a retail restaurant name, you got some metals names, and you got a tech name.
Todd, thank you so much, man. I really appreciate it.
And thank you. Remember to visit.
Yeah, absolutely. And where can people reach you?
That's what I got on my screen now, schaefersresearch.com.
Awesome. Thank you. Thank you so much. I really appreciate it. I know there's some questions in the YouTube chat, so absolutely, I'll post that in here so that you can go and answer some of those questions. How about that?
Okay.
Thank you, Todd. Appreciate it, man.
Okay, appreciate it.